Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the New Zealand versus US dollar. Today's date is July 18, 2023. The New Zealand versus US dollar is one of the weakest currencies today. You can see the sharp decline here in trading. By the way, the CPI data for the quarter, it will be released later on in the new trading day in New Zealand, so later on tonight in the US, and that may have an impact on the price action seen today with the expectations of 0.9% versus 1.2% last quarter. The good news is it's down from 1.2%. The bad news is it's still 0.9% for a quarter. So if you were to say 0.9 times 4, it still comes out to 3.6%, which is above the 2% target for the Reserve Bank of New Zealand. So that is still an issue, but the price action still move to the downside off the hourly chart here today. Now, the move lower did see the price fall below the 200-hour moving average. That's the green line in this chart right here, but the price momentum could not be sustained, and the price has since rotated back to the upside. That was the first break since this day right here, going back to, I guess it's around July 7th, where the price also briefly moved below that level and then rotated back to the upside. So this failure right here has led to a rotation back higher in this currency pair. What would make the buyers more happy is if it were to break back above this level at the 0.6305 level. That level corresponds with the swings highs from what is that? Wednesday's trade last week. We broke above it on Thursday and rotated to the upside. In trading yesterday, we came down to that level, found support against it before rotating higher, and then in trading today, we moved below it. So, needless to say, the 0.63055 area is a level that, if the price were to move above it, then they would give these dip buyers some additional confidence off of the 200-hour moving average. Above that, we have this other swing area, which goes up to 0.6316. So there is, we have levels on the top side that could hold resistance to keep a lid on this pair. We will see how all that plays out. And so far, it is holding resistance. As you can see, the price high has come in around the 0.63 level. So the natural level of resistance is also holding resistance for this pair. But having said that, we still need to get below the 200-hour moving average on the downside. That will be the key break that we need to get below and stay below to increase the bearish bias here in the New Zealand versus US dollar. If we can do that, then we'd look toward this upward sloping trend line coming in, looks like somewhere around the 0.636240, and then followed by the 50% midpoint of the move up from the low price that we saw back at the end of June to the high price that we saw in the month of July. So there you have it. A look at some of the technicals with resistance above, support below. We'll see how it all plays out. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.